Happy Thursday out there, Team 42. It's your skipper here, Darius to present our macro minute for Thursday, May 8th, 2025. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, who's right, President Trump or Fed Chair Powell? Our answer: President Trump's latest attack on Fed Chair Powell follows yesterday's Fed decision and Powell presser, in which the Fed exercised continued caution regarding further policy adjustments. The FOMC statement concluded risk of higher unemployment and higher inflation have risen, and the decision to leave policy rates unchanged was unanimous. There were a handful of statements that Powell made yesterday that indicated he is much further along in his understanding of the full distribution of probable economic and financial market risks than President Trump. All told, Powell's latest commentary is consistent with our view that the Fed should be doing absolutely nothing right now to preserve foreign investor confidence in the US dollar and US assets. Any threat to central bank independence, real or perceived, risk reigniting capital outflows and another round of the Sell America trade. See April 21st for more details. Moreover, preemptively cutting rates right now would likely be so counterproductive in tolerance of above target inflation signaling terms that it risks igniting a sell-off in the bond market. See fall of 2024 for more details. Additionally, increasingly unsound fiscal policy means credible monetary policy is the only thing standing in the way between current pricing in the Treasury bond market and another 100 to 200 basis points of term premium widening from here. See April 11th for more details. If Powell blinks and causes investors and foreign creditors to broadly lose confidence in both the US dollar and the long end of the curve, his legacy will be worse than Arthur Burns. At 72 years old, Powell's worst fear must be that the world remembers him for running aggressively expansionary monetary policy amid aggressively expansionary fiscal policy for so long that it triggered a 40-year high in inflation and eventually spooked the bond market so bad that perpetual yield curve control became necessary. That'd be one hell of a legacy, Mr. Powell. So hopefully you're listening, and kudos to you for doing what you got to do to preserve our U.S. economic exceptionalism and exorbitant privilege. Thank you, sir, for your service. Transitioning to our 42 macro dashboard. As always, a wrap up with the question from our community. This one's regarding Fed doing stealth QE. Any idea why this hasn't gotten more attention? Seems to be accurate based on these SOMA auction purchases. So that the client is referring to is this headline here from what is this, Blockchain News. That's a website, I guess is a crypto website. It says Fed purchases 42 billion in 10-year bonds. Stealth QE signals bullish momentum for Bitcoin and crypto market. Boy, this is exactly the kind of nonsense that I call out from the shills, charlatans, and snake oil salesmen that operate in this space, and really, by and large, operate in the space that sells research and insights to retail investors. This is a classic example of shills, charlatans, and snake oil salesmen telling retail investors exactly what they need to hear or want to hear, telling the retail investors exactly what the retail investors want to hear, so that the shills, charlatan, and snake oil salesmen continue to get paid based on clicks, flows, subscriptions, hodling Bitcoin and making sure the price stays high or goes up. All this stuff is designed to get you guys to participate in the Ponzi. Now, I'm not at all saying Bitcoin is a Ponzi. Bitcoin is a real legitimate institutional asset class that I have believed in for 5 years now. I've been a Bitcoiner. I'm a huge Bitcoiner. I will always be a Bitcoiner, barring some unforeseen events. So I don't believe Bitcoin is the Ponzi. I believe the constant marketing of Bitcoin is the Ponzi, getting more people on the ladder, convincing them to hodl during drawdowns to keep the price higher than it otherwise would be in a market cycle downturn. That's the Ponzi. It's the infrastructure around Bitcoin that is the Ponzi that guys that the shills, charlatans, and snake oil salesmen are using to extract revenue from you guys, either through advertising. I'm looking at this Adobe advertisement right here. I'm sure if I scroll down, I'll see even more advertisements, or subscribe. I'm sure these people have a pro service. I see a login. So clearly login/join. Now you can buy their services, but then ultimately your activity, inflates the value of not only Bitcoin, but obviously other cryptos in the market. And so going back to this question, The Fed is not doing stealth QE. The Fed will signal if it was doing QE because it would stealth QE is it would be a worse version of doing QE. If you're going to do QE, you'd rather signal to the market that you're doing QE so that the policy is more effective. But more importantly, here's why the Fed isn't doing stealth QE. This headline says the Fed purchases 42 billion in 10-year bonds. I don't think people, the average person, clearly, and operating this website, and very clearly thinks the average reader of this website is too dumb to realize that bonds mature. Like if the Federal Reserve is trying to roll off $5 billion a month of bonds on its balance sheet, and let's say, I don't know, 47 billion of bonds matured that month, because there's a lot of bonds on the Fed's balance sheet, $3 or $4 trillion worth, then they need to buy 42 billion to keep the balance sheet the same. So this is the whole point I'm making, is that this is just, they're taking very esoteric, but more importantly, non-news items and turning it into news so that they can trigger your, the gullible reaction that you have to either buy their services, buy more crypto, or buy more Bitcoin, and ultimately do things that may be potentially beneficial for you or not beneficial for you, but will most certainly be beneficial for them. And this is the kind of charlatan, snake oil salesman type nonsense that that we try to guard our clients against and guard our community against here. This is why one of the many reasons why 42 Macro exists is to elevate the intellect and the wisdom among retail investors so that they're not being shilled to death by nonsense like this. Again, the bonds mature. And so if the Fed doesn't want $47 billion of bonds to roll off its balance sheet when it's targeting an explicit roll-off policy of $5 billion, it has to buy 42 more billion with the maturing bonds proceeds in order to, not prevent a faster decay in its balance sheet than it otherwise would be. If the Fed never bought bonds, then its balance sheet would just shrink to zero, and its bank reserves would rise as bonds shrink to zero. Because the Fed is not or the Fed's balance sheet would just keep shrinking, and as the bond proceeds mature, as the bonds matured and the proceeds were doled back out. So this is very basic stuff. I think anybody understanding who is in institutional finance and understands the Solon portfolio, it's nuts to me that I even have to have a conversation about this, to be totally honest with you. But again, this is the kind of stuff I'm seeing out there that causes me to tweet what I tweet and say what I say in these programs. There's just a lot of shilling, charlatan, snake oil salesmen, snake oil being sold to gullible retail investors. And I want to make sure that you, if you're paying attention to me, if you're a client of 42 Macro or just generally in our community, then you're not a victim of this kind of research. So I think I've ranted enough for this. I'm going to be offline tomorrow, Friday, and Monday, traveling out of the country for a wedding. Super excited about that. So I'll catch you guys back here on Tuesday. Just wanted to say thank you. We appreciate you. And just, be careful. Guard yourself against this. Do more research. Guard yourself. There's a lot of people who want to take money from you or want to convince you to do things in your portfolio that are more beneficial for them than it is for you. And so I want you guys to, be vigilant and be alert for these kinds of things, which is why we talk about them here in our Macro Minute. So hopefully that was helpful. We'll wrap it up there, and we'll catch you back here on Tuesday. Have a great weekend. Cheers.